Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview. And this one I'm really excited about because we're going to get all kinds of crypto knowledge. I would consider this gentleman to be one of the smartest guys in the crypto industry. And I'm excited to have this conversation with him. I am a shareholder of Banxa. I have been a shareholder. Right now, it's not exactly the most pleasant feeling in the world, but then again, that's the whole small, mid cap, micro cap space. It has nothing to do with this company. The company's name is Banxa, and the gentleman that is meeting with us is the founder of Banxa, Domenic Carosa. And the ticker symbol on Banxa is, hold on one second. Oh, there we go. BNXAF. And maybe that'll change sometime in the hopefully near future, but we'll talk about that in a second. Domenic, I want to thank you very much for coming in and doing the interview here with us today. And I'm looking forward to learning more about you and the company.
Thanks, Tim, for having me, and happy to sort of go through and not only talk about Banxa, but also just talk about the overall state of the industry and where I see the future and the potential.
Okay, so do me a favor before we get into the company itself. Give me some background on Domenic. How'd you get here?
Yeah, good question. So I've been personally involved in technology since mid-90s, originally from Australia, but now based in the Netherlands, and listed my first company, in fact, on the Australian Stock Exchange in 2000, which I ran for 8 years in digital media, and then crossed over and ran a venture capital fund investing to SaaS companies in 2008 for 5 years, and then got involved in crypto in 2013. Read a couple of the white papers, was fascinated by the technology first and foremost, and then really tried to understand what are the consumer and business and institutional avenues for the tech. So the technology was kind of opened my eyes to Bitcoin and Ethereum and the other parts of the ecosystem, which I'm sure we're going to talk much more about it. And then literally Banxa was born in 2014, and fast forward to where we are now. We listed on the TSXV in January 2021, and we are now in the process of uplisting to Nasdaq sometime. I'd say, over the next quarter or so on Nasdaq, which I think will be a major feat for the organization. And for those that are new to Banxa, the best way to describe the company is we're like the PayPal of the crypto industry.
Okay, that makes it pretty simple, right? So when you say the PayPal of the crypto industry, so is the consumer, the everyday consumer, would they be using your product?
Yeah. So the way it sort of great. It's actually like PayPal. So you don't go to PayPal directly. You go to a partner or an e-commerce website, and then you've got Pay by PayPal. Very similar analogy. We've basically plugged in our payments and our regulatory compliance layer. We call that the Reg Tech layer. We plug that into global crypto to crypto exchanges and wallets like Binance and Huobi and OKX and many, many others. And we allow their customers, who ultimately become our customers, to convert fiat money, US, Euro, Canadian dollars, into Bitcoin, Ethereum, and other coins. And we manage that payment process. We do it in a compliant way because we have multiple licenses, vast virtual asset service provider licenses around the world. And then we provide the liquidity. We will send that coin into your Binance wallet. We'll send that coin into your Edge wallet. And so that's basically how the business model works. We take a clip of the ticket. So in very, very similar to PayPal, but PayPal does that for physical products and around sort of e-commerce type websites. So that's kind of how we work as a business.
So how do you differentiate from any of the other like, I don't know, and I'm just gonna like Coinbase or so it's how do you differentiate from those types?
So Coinbase is an exchange.
Okay.
Our customers are exchanges. So for example, if Coinbase, they're focused mainly on North America. If they wanted to move into Europe, into Australia, into some of the other markets that they're not in, you can't just turn up to our country and say, we're starting. It doesn't work that way anymore, because there are now local rules and regulations in each country. The concept I mentioned, VAS, Virtual Asset Service Provider licenses. You need to go in, you need to set up a company. You need to have local directors on the ground. You need to work with the local regulator in order to be able to acquire a license. And that can take anywhere from 6 to 18 months. And only then can someone start trading legally in the space. And so, the example there is, Coinbase or any other exchange, we could help them launch into markets outside of their home market in a matter of weeks, as opposed to a matter of years. And that's what we've done for a lot of our partners. We've got over 100 B2B exchanges and wallets and DeFi platforms. And we're really bridging the fiat world with the digital asset world in a compliant way. Unlike when we first got involved in the business in 2014, where there were no rules, the industry is now regulated. It's becoming even more regulated. And when I know sometimes I have discussions with investors and they say, is this regulation good or bad for you? The answer is, it is good for us. It actually creates a barrier to entry for competitors coming in. And because we've been in the space now for over 8 years, we've got a solid technology platform. We've got over 200 people in the company that actually know what we're doing. In fact, roughly a quarter of those are in regulation and compliance. And we've got all these licenses around the world. And in fact, we've already now started the licensing process in the US. In the US, it's not called a VASP. It's called an MSB and an MTL, money transmitter license. And we've already well down the path of acquiring the MSB and the MTLs in the US marketplace as well.
Okay, so your marketing, or your targeting, your customer is like the Coinbase exchange. And how many exchanges are there currently?
So in terms of our universe, and there's actually I think there should be a slide deck, and I'm trying to think of the slide number, but basically there's a slide there that slide there talks about our customers, and obviously we've got a who's who of the industry, but at the same time there are significant other opportunities in in the space as well, not only in terms of exchanges and wallets, but also the whole NFT space, the metaverse space, the gaming space. And if we just take a step back and kind of look at the whole industry, just to kind of give you a bit of a sense of how Banxa fits in. I'm a big believer of the tokenization of everything. Whether it's physical assets or pieces of art through an NFT, or gaming products or products in the metaverse. Ultimately, each of these things is a token that lives on the blockchain. And so the whole philosophy around Banxa is we take fiat money and we convert it into a token. We're not here to tell you whether or not Bitcoin, Ethereum, Solana, Polkadot, or any of the other tokens will win. We're really a platform that will facilitate what customers want. But in terms of where the growth is today, and really historically, our focus has been around the exchanges and the wallets, because that's really let's call it the early adopters coming in. And what we're starting to see from an industry perspective, it's now moving from the early adopters, the tech nerds such as myself, the finance nerds, into becoming much more mass market. So we're just starting to see that. And you may ask why. You've got verticals like NFTs, non-fungible tokens. You've got the metaverse and gaming, which makes it much more attractive to millions and millions more consumers around the world, because DeFi is only of interest to those hardcore finance and tech nerds. Gaming is interesting to, and NFTs to millions of consumers that really don't care too much about DeFi, even though I love DeFi, and we can talk about the opportunities and farming and liquidity pools and all that kind of stuff. But so really, in essence, the fact that the industry is growing and going much more mainstream tells me that there is significant growth to be had over the next 3 to 5 years in NFTs, gaming, and the metaverse.
I don't think that we've actually even scraped the surface. You know, I'll just be 100% honest. I missed the entire crypto. I mean, I went and took a little course on Bitcoin when it was trading at 3,000. And I sat in that room and, you know, we went through the opening of a wallet and 24 words and the whole thing, and don't lose that, and you can't put it there. And I'm like, you know, it was just too much for me. And I walked out thinking, there's no way in hell this is going to last. This is going to be a fad in a heart. And of course, I was dead wrong. Because I just couldn't, you know, look, I want to buy a stock, I hit a button. I want to sell a stock, I hit a button. I mean, I don't have to worry about a 24-word thing. And if I lose it, I'm going to lose everything that's in there. It just was very kind of nerve-wracking to me. And then I had concerns about, you know, cyber attacks. And I mean, what's to stop my stuff from just disappearing overnight, you know? But clearly, things have evolved. And then when NFTs came out, and I grew up as a comic book guy, right? So I was, a comic book collector, right? So when I started seeing these NFTs and I started thinking about the applications or potential applications, it was like mind-boggling almost, right? Because And what was really interesting was the fact that the original owner could wind up collecting revenue in perpetuity, right? His family could wind up collecting revenue from the sale of some collectible, you know, 30 years down the road, right? And that to me was unbelievable, really. And then I started thinking about artists, music artists, and anybody that's got anything that could be considered valuable and a collectible, and they have rights to, right? But they have been unable to collect anything because of Apple iPod didn't help the music industry or the artists. It actually hurt them, right? Because nobody needs to buy a CD anymore, or, you know, or an album or a cassette. I mean, all of that disappeared, right? So as I'm looking at this thing, and then I started thinking about, okay, so I am a gamer. I'm old and I suck, but I do play games. And I never thought about the fact that I buy these skins for guns or my outfit and all this stuff, right? That I don't own. I have no ownership of it. I don't know why I do it, but I've done it. And I know a lot of other people do it. And that's basically kind of a NFT, right? I mean, I've been spending money on something that's virtual that I don't own. So I started thinking about the jewelry industry, right? If you have an actual piece of jewelry that is let's say it's maybe there's only 10 made in the world, right? And you own one of those 10. How do we have an issue with fraud in the collectibles and art and markets, antiques, right? I think about 6 billion a year in fraud. So if you have a physical item that has a digital footprint on the blockchain, you know, that the insurance company can verify, I mean, there's a whole ecosystem that could be developed that, you know, maybe it helps eliminate the issues of fraud. Does that make sense to you?
Yeah. There's so many things that unpack. Once again, let me just try and take a step back.
Okay.
Just to give people some context around, you know, Bitcoin, Ethereum, and that, and then I want to talk about NFTs. because I think NFTs are going to absolutely change how artists make a living and are rewarded in the future. And you've touched on those points. The way that I look at Bitcoin and Ethereum and investing in that, it's like investing into software and investing into a software company. People get caught up in what's the price of Bitcoin today? And it goes up and down, and the volatility for a lot of people, they can't understand that. But at its core, it is software. It's like you investing into Microsoft, in the early 90s, or other software type companies, or Oracle. Like, it is that fundamental. And because at its core, what is it? It's just basically software that you are investing into. That's one of the points. Also, just coming back to NFTs, only now, I believe, I make a prediction, I think we're going to see a renaissance over the next decade or two of a whole bunch of, creativity, because finally there is a way to protect and monetize content in a way that was never, ever possible before. And like you've mentioned, whether it's a physical product and you attach an NFT to it, effectively it's digital signature, or a virtual piece, a comic or a comic strip, that is created by someone and then sold and then resold over and over again. The ability in that smart contract to say the creator can generate a 2.5% or 5% royalty every time it gets sold automatically, because it's all on the blockchain and it just happens automatically. Like, that is absolutely revolutionary in the industry. It was never, ever possible before. And this is why I come back to the first point I made. When I first read the various white papers in 2013 and 2014, what struck me was, the technology and what its potential was. And frankly, we have just scratched the surface in relation to its potential. It is as, it's like the internet revolution, but we're only, from a baseball perspective, we're only in the first base. Like, we're actually that early.
Right.
First innings.
The first inning. No, I happen to, I agree with that 100%. Whether it's Bitcoin or Ethereum that, comes out on top, or if it winds up being another coin, what I have learned a lot is that if you say anything even remotely, even questioning Bitcoin or Ethereum, it's like you insulted somebody's mother. They come at you very aggressively because they are very committed to their coin. I get it. To me, we're so early that it's difficult to say who's going to be the winner in my mind, because there was a company called MySpace that was out before Facebook, right? Where's MySpace? They're not even around anymore, right? Things change. People change very quickly, and sometimes when you are this early, I just think that there is always that opportunity for a new up and comer, right? You get blindsided by. Would you agree with that or no?
And I think there's a couple of things to. And I will refer to Banxa and then just talk more holistically. That is why at Banxa we are building a platform. We're not here to pick the winners. So effectively what Banxa is it's like the infrastructure. We are creating the infrastructure of this new industry. And I basically that core infrastructure, and then over the top, you've got Bitcoin and Ethereum. And then you've got all the other blockchains and the layer 2 blockchains, and then the NFTs and everything that sits over the top of that. It's the analogy is back in the mid 90s, you had companies like Cisco that had that physical infrastructure, connecting the pipes, the internet pipes. And then you had the ISPs that sat like AOL, that sat on top of those pipes. And then on top of that, you had the hosting providers, and then the e-commerce providers, and everyone else that sits on top. So we're still at that kind of Cisco ISP layer.
Right.
You know, and the NFT layer is just that kind of next evolution that's starting to unfold. And as you mentioned, gaming, like people are now buying, like their own suits or armory or whatever else, and then being able to build it up and then trade it or sell it and actually generating, income from doing so.
See, now what's interesting about that is, and I understand that's I've heard about that, right? Where you actually, whatever the outfit or it is that you buy, you take wherever you want to go to another game. But I mean, not in the big commercialized, like the Call of Duty is what I play, right? It's an Activision game, and you buy the outfits, but I couldn't take it over to, a different game and have that outfit. I don't have the ownership of that, but I've heard that there are now PC games where you can do that, right? You buy your outfit, you own it, you take it to whatever game you go to play, right? And that is pretty interesting. And then having the ability to then, if somebody likes your outfit, to say, oh yeah, you want it, you can buy it and make a profit off of it. That's pretty amazing, right?
Yeah. And once again, you're preaching to the converted, and there's the whole notion of, what is sometimes referred to as, as Web3, and and what that ultimately is doing is opening up all of these new platforms, decentralized platforms. They're not owned or controlled by a Facebook or a Meta or any of those kind of groups. They're effectively owned and run by the community. And there's this big growth that we started seeing of DAOs, decentralized autonomous organizations, a DAO. So it's like a company, but it's not a company. And it is basically, I'm going to say, owned by the token holders. It is effectively managed and voted on by the token holders. It's kind of like in some days, like a mutual trust, but it's on the blockchain. It's open and transparent. And so we're going to see significant opportunities in companies or people setting up DAOs. Like there was a DAO that came out, I think it was late last year, early this year, called Constitution DAO, and they're trying to buy one of the last copies of the American Constitution. And I think they raised 5 or 6 million in that.
Okay. So I have spoken with other CEOs that are basically under the believe that at some point, I mean, who knows how long it takes for us to get there, but that every transaction will be on the blockchain. Is that something that you subscribe to as well?
Yeah, I'm a big believer of the tokenization of everything, or pretty much everything. It being on the blockchain makes much more sense in terms of being open, transparent, easily auditable. And one of the misconceptions that some people have around, Bitcoin and some of the other coins is, they think, particularly in the early days, 2014, you brought up the word Bitcoin, they thought, oh, you're doing something, in the illegal, gray or in the black, something illegal. And what people have actually realized, and I mean, reading the white paper, I kind of knew this from day one, is, if I know the wallet address A to B, basically I can track that whole transaction through. And so it's actually more open, more transparent, you can basically audit it much more than you can cash or gold, because people think, oh, Bitcoin, money laundering and all of that. It's complete BS, because it's actually more transparent than cash. And so once people kind of realize that, they realize, okay, out with the old. I mean, it's back in the olden days. I'm kind of 47 now, and I was brought up with technology in the early 80s. My first computer was an Apple IIe in, I think, 1980 or 1981. So I'm a nerd at heart, and I remember the internet, kind of the internet before it was called the internet. Where you basically just type, like words and sentences on the screen, before the World Wide Web. And
Right.
back then, people thought, with browsing, it was only ever going to be utilized for porn. That's the only reason people are going to basically be using the internet. I mean, sure, people do. Great. Go on, good on them. But there are so many more things that you can actually now use the internet for.
Oh, listen, man. If I go back to when I first got involved in the stock market, right? I had to have a broker that I had to, if I wanted to buy a stock, I had to send them the money. I had to pay a big commission on the front end. I had to pay a big commission when I sold the stock. If I wanted any information on the company, I had to ask them to mail me the latest, deck that they had. And I mean, you look at where we are today because of the internet, right? I can find out anything about any company in seconds, right? I can look up their SEC filings. I can do all of this stuff, and I don't need a broker. And there's zero trade commissions. I mean, if you look at what has happened to this industry, it's like unbelievable, right? And I'm looking at this, one CEO gave me the example of, and I thought this was, he's talking microtransactions where, let's say the Wall Street Journal has an article that comes out and I click on it. I want to read it. But instead, what I get is subscribe to the Wall Street Journal for a year for $180 and you can read this article. Well, I don't want to subscribe to the Wall Street Journal for a year. I want to read that article, right? So if the article was 50 cents, could I read the article then, right? So maybe the Wall Street Journal is saying, yeah, if you want to read this article, instead of subscribing, pay us 50 cents. I would do that, right? All day long. And if you think about how many things are out there like that, where you could literally spend, 5 cents or 10 cents and I could see that happening, and all of that being on the blockchain is, I don't know if we have the computing capability or the servers to do that kind of thing. I mean, you're talking, that's a lot of volume, right? I mean, what do you see? What are the challenges for this to move there? Do you see?
So I think one of the challenges that you brought up, I think you were talking about, you did a course a number of years ago, and they're talking about the 24-word, your private key, or sometimes called the seed. And it was back in the olden days, you kind of needed to have a computer science degree to actually get into Bitcoin and dealing with wallets and everything else. Thankfully, the industry is much, much simpler now, whereby you can download the Edge wallet. It's a non-custodial wallet, and I'll talk about the difference between custodial and non-custodial in a moment. It's a non-custodial wallet. All you need to remember is your username and password. They keep the private key, your seed, in the background, so you don't need to deal with that. You can obviously write it down, but it's not necessary to log in, to the app. And it looks like a ordinary banking product, but it's all Bitcoin, Ethereum, or blockchain based. And so the user interfaces are becoming much, much simpler. And that's in terms of just buying, setting up a wallet, buying Bitcoin and Ethereum. That's point one. Point two is, where do I still see challenges? Basically, NFTs. Right now, if you want to buy an NFT, you need to, get your Bitcoin or Ethereum, convert it into, Ethereum, have something like MetaMask, make sure you've got enough, gas in your MetaMask wallet, go into something like OpenSea, click a few buttons, buy you an NFT, do a transfer. There's like 6 to 10 hops for most people, you've kind of lost them at the first hop, the first button that they need to press.
Absolutely.
Same with DeFi, decentralized finance. There are great platforms, like Aave and SushiSwap, but for most people that want to get into yield farming, and generating yield, it's too complicated for them. They're used to their banking product or even a broking product. I want to buy this stock. I click this button, confirm, it's done. and that's part of the, I guess, challenge, for companies like Banxa and people in the ecosystems. How do we make it really, really simple? And that's part of the, I guess, the value proposition, coming back to Banxa is we try and make that process really simple. We take the PayPal, philosophy, 3 clicks or less. You don't have to be a financial or technical genius to make it work. You can literally click a few buttons and that's done. And we do the heavy lifting behind the scenes. So, in my view, when the blockchain will be, ubiquitous and will dominate, the world, is when you don't even know that you're using the blockchain.
Kind of like you don't even know you're using the internet, right? I mean, that's how. I mean, like you said, everybody thought internet is going to be very specialized, right? I mean, now everybody uses the internet for everything, right? Just about. I mean, look at Amazon, right? I mean, I want something. What do? I hop online, I find it, I order, I hit a button, it's on the way, I'm good to go, right? I don't need to get in the car. I don't need to do anything. I just hit the button and it's coming.
and actually, the interesting story. So in the early 80s, I think it was late 70s, early 80s, IBM commissioned, I think it was a McKinsey type consulting firm, to do research on the home PC personal computer market. This is, really, really early days. And I think, I can't remember if it was McKinsey, and I don't want to single out McKinsey, but it was let's call it one of the big top tier consulting firms. They came back and said, worldwide, there's no more demand than like 80,000 computers, personal computers ever. And we kind of think about that now, and you think that was a joke. It's like everyone's got a computer and a laptop and an iPad, and like they've got not just one,
they've got like 15 computers
in their house, let alone at the office. And so this is sometimes, once again, we can absolutely get it wrong from a technology perspective because it can look and feel so complicated. And once again, really from a Banxa perspective, ultimately what we're able to do is take that complexity out for investors. Effectively investing in Banxa ultimately is like investing into Bitcoin, Ethereum, and Solana and Polkadot and all the other coins out there, because we're ultimately that platform. And I think the industry has got a lot of work ahead of it in terms of just trying to make it really, really simple. We are really in the first innings, but that's, for me, the most exciting part of it is the fact that we are still so early in the evolution of the ecosystem. And
so let me ask you, of all the coins that are out there, and I don't know how many coins or tokens and all the stuff that's out there, how does a coin or token get approved how do you guys, do you qualify the coins and the tokens that are going to be traded on your exchange? I mean, what you're going to deal with, you qualify those things?
Yeah, really good question. Once again, this is part of the Banxa secret sauce. We support about 80 coins right now on blockchains.
Okay.
Obviously, the big ones like Bitcoin and Ethereum, and a number of layer 2s as well, which kind of sit over the top. I'm not going to get too geeky and get into layer 2. But the universe of coins is, there are thousands, if not tens of thousands of coins. In my view, most coins are shit coins. Excuse my language.
No, I like hearing that. Go ahead.
And if you ask me, what do I hold personally, just purely because, I mean, I'm obviously in the space. I hold Bitcoin, Ethereum, gold, and silver. That's kind of like, my hedge against all the stuff that's going on around the world, inflation, geopolitical risks, etc. I don't have time to get involved in, where it's Solana, Polkadot, or others. I've got, there's a couple of funds, including Apollo.
But you own Banxa too.
Yeah, oh yeah, I'm a major shareholder of Banxa. So, definitely very, very focused on the space. And this can obviously get very, very confusing. And there's a lot of, meme coins out there. I think we were talking about it earlier, Tiger coin, that just kind of like shot up and then shot down. There's a lot of BS going on in the space. My view is, we focus on really the top coins. And just coming back to your question, we have a thorough internal process. Every coin gets a legal review. Is it a utility token, like a bona fide utility token, partly determined by the
utility token? Utility, define that for me. Utility token. What does that mean?
There is utility. So there's two types. There's a utility token, and there's a security token. Like the security token is something that can be tokenized, whereby there's an expectation of an outcome, of generating a yield, or the price going up like a stock. Like that's a security token. While a utility token could be like in the game. Your utility token, like an NFT, is something that you're able to buy, use, and trade. You don't do it because there's an expectation that it's going to double overnight. So there's the Howey test, which is basically a well-known US test that we go through. We get legal opinions on certain coins. That's why the universe is thousands. We've got 80, and frankly, the Pareto principle applies. The 80-20 rule applies, or in some cases, this would be the 2% of coins represent 98% of all the volume out in the marketplace. So obviously we're going to focus on those, but there are new projects that are coming up all the time, and we're adding layer 2 tokens. And maybe just to kind of unpack, because I've mentioned layer 2 a couple of times, and just to give people some insight without getting once again too deep into the technology. Bitcoin is known as a layer 1 coin. That's layer 1, and that is there's great utility in regards to the Bitcoin, where it's highly secure. In 10 years, it's never been hacked, and allows for transactions. However, those transactions are slow, and you can only do so many transactions
costly, at a time. Right?
Not too costly, not compared to Ethereum and gas, but this also applies to Ethereum. So what developers have been doing, you give a technical person a challenge and they'll come up with a solution. You've got Bitcoin, which is sort of layer 1, and now the Lightning Network that sits on top of the Bitcoin network is called layer 2. You can do millions of transactions there at an absolute fraction of a cost. And coming back to your discussion around, you want to buy Wall Street Journal, you just want to read the article for 50 cents or 20 cents. So using the Lightning Network, which sits on Bitcoin, you can do a micro transaction for a penny or 2 pennies, and the cost will be a fraction of a penny. And you're never going to be able to get that kind of reduction of cost in the traditional financial system. So in that respect, once again, layer 2 didn't exist 2 or 3 years ago. Now it does. And so what developers are doing, they're taking layer 1, they're building layer 2 on top of it, just to make it, faster and cheaper for consumers out there. And that's just one of multiple examples in the space.
Got it. So, but as all of that develops, and you go through the process, that creates more coins that are going to be traded through your system, right?
Yeah. And just to be sort of it's clear, we're like the PayPal. So we're not an exchange like Coinbase or Gemini, but we plug into exchanges like Coinbase is not our customer, just to be clear, but exchanges like Binance and OKX and Huobi and our 100 other customers, and we help their customers go from fiat to crypto and crypto.
So if I put in, let's just use an example here. I take 50 grand and I'm going to buy some no, not Bitcoin. I'm going to buy some Ethereum or whatever other
Solana.
Right? How quickly is that transaction time through you guys? I mean, I send the money. How quickly am I getting my coins?
Once again, that's part of our secret sauce, literally within minutes. So if you're a brand new customer on Banxa, it will take you 5 minutes because we need to verify who you are. So we go through full AML KYC, basically like a broking firm. It's all online. It's all via mobile. So it's fairly seamless.
Okay.
Then we take your money, we build your credit card or using something like ACH or Wire or Interact in Canada. And then literally within a minute, you'll have that coin sitting in your wallet. If you have already used Banxa before and you're already verified as a customer, then it's like going onto Amazon and saying, I want to buy an audio book, on Audible or I want to download a book. You literally click the button, click OK on your bills, your credit card, and then 5 seconds later, you've got that audio book. Obviously it's going to take a little bit more than 5 seconds because a transaction needs to get verified on the blockchain. That could take 5 to 30 seconds, maybe 60 seconds, but it's all fairly instantaneous in that respect. And so, part of, once again, the secret sauce that we've built at Banxa, so we can deliver the coin to you both what is called on-chain or off-chain. And the difference there is on-chain, we basically will deliver the coin on the blockchain. There'll be some fees associated with that, sometimes called transaction fees or gas fees. Sometimes only pennies, or if the network is congested, could be $10, $20, or $30. But then we've also built the technology to be able to build what is called off-chain. And so with our big exchange partners, we basically plug directly into their liquidity pool. In the equity world or the broking world, it's like us plugging into a dark pool of a number of exchanges. So we're then able to grab that liquidity from that dark pool and send it directly to the customer off-chain. At some point, it will then be recorded on-chain, and that way we can save all the fees. So once again, it's because we've been around for over 8 years. We've got a lot of experience in terms of building a solid technology platform that can do things both on-chain as well as off-chain.
Okay. All right. So let's talk about some financial highlights here. Right. Let's talk some numbers. So 620 million US total transaction value. That's for
6 months to December.
Months. Okay. That's a lot of volume.
Yep. And revenue about 29 million US. We got about 19 million US cash in the bank. So, we're cashed up to do all the things we need to do, and a couple of $1 million loss. And that's notwithstanding that we've grown the business hundreds of percent. We've 4x'd our team. We've now built teams all around the world because, as we know, crypto never sleeps. It runs 24/7. So we have people spread, from Australia, which is where we originally started, to now Europe, Asia, and now we're building out teams in the North American market as well. Okay.
So from a revenue standpoint, you absolutely meet the Nasdaq minimum requirement, right? Not even an issue there.
Yeah. So where we are on Nasdaq is, I get a number of questions from shareholders. So we submitted our application late 2021. We've basically been going back and forth with Nasdaq. I think the first revision was like 12 questions, and I think the last one that came through was like 2 or 3 questions. And as our lawyer said, they're fairly, their questions are fairly prosaic and more administrative. So right now we are, let's call it, in the final stages. There's one hurdle that we don't meet just yet. We almost met it, but we don't meet it right now. Is we need a minimum $2 share price, and we're just trading under that at this particular point in time. What would companies in ourselves, and I'm not going to make any forecast to tell you what we're going to do, because
right.
Remiss of me to do that. But if a company was in this position, what would they do? What are their options? They can either go in and undertake a share buyback, to buy everything under $2 to basically bring it above that price, or to do a consolidation. For example, we got 50 million shares on issue, and if we did, for example, a 2-for-1, we'd have 25 million shares on issue, which is still fairly, fairly good.
How many? Speaking of that, Dom, how many shares do you guys have outstanding, fully diluted?
Fully diluted, 52 million shares, fully diluted.
So 52 million shares, and if I'm not mistaken, you have a pretty good insider ownership, right?
Yeah, 20% plus of insiders, including myself. And so we could do a consolidation. So with the TSX, we can do a consolidation without shareholder approval. It takes 1 week. And then, we basically go through the Nasdaq door. So right now we're just considering different options. Once again, I can't tell you what we're going to do, but, we've got our eye on the prize. My view is simply Banxa belongs on Nasdaq. Right now we're trading at, under 2 times revenue to enterprise value. In fact, it's even less than 1.5 times. The peers in the space are all trading at, double digits, low double digits. So I think there's a big opportunity for us to make that transition, get access to a market with really deep liquidity, with research firms that are very specialized in crypto. We've now got Lake Street and HC Wainwright that have actually now done independent research on the company. Price targets are between $4 to $7. And there's a number of other research or broking firms and banks that we're currently talking to, as well as part of the process. And now that COVID is, I'm not going to say over, but almost over, the ability to go out there and actually start, having physical roadshows. In fact, as of next month, I'm in Miami. After that, I think I'm in LA and New York for physical roadshows. So finally, I and we as a company can get back in talking to shareholders and investors and institutions, and I think we're just going to top and tail that with our Nasdaq uplist.
Are you going to the microcap conference in Las Vegas by chance?
I think if that's the one in May, it is highly, highly probable I will be there. I think I'm only going to be there for a couple of the days. In fact, I was talking, we just engaged a new US-based IR firm. So part of what we're doing, just as part of the Nasdaq, we've engaged a couple of new IR firms that are very US-centric, because we kind of made that shift from Canada to the US. I think at some point we will move from our accounts being in Australian dollars to US dollars, just to make it much easier for institutions, investors in the US to understand Banxa, because most people that I talk to have never heard of Banxa before. So we've got a lot of work. Hence, you've got a lot of opportunity.
And that's part of the reason we're doing this interview right now, right? Is to get the Banxa story out, because I don't think there are a lot of people that are familiar with it. I don't know which IR firms you're dealing with right now, or if you've met Robert, who is putting on the SNN conference in Vegas. If you haven't met him directly, I'd be happy to make an introduction.
Love it, please.
And then there's a couple of firms that I really like in the US that have been, I mean, look, there's a lot of IR firms. Some of them are okay, and some of them have brought me a lot of good quality leads, right, for me to look into. So if we can talk about that offline here.
Yeah, appreciate that.
So you lost a couple of $1 million, but you're putting the money, the revenues, you're putting that back into growth, right? I mean, so are there potentials for acquisition tuck-in targets for you guys, or are you pretty, set with what you've got to offer?
Good question. So just on the numbers, stat loss of a couple of million. If you sort of look forward with regards to our adjusted cash from operating activities was positive 1.5 million, because there's a number of non-cash items in there. Earlier in 2021, we had just under 20 million US in the bank. As of last reporting period, we've still got just under $20 million US in the bank. We've grown our team by 4. We've grown our revenue 4 or 5x. So we kind of, I guess it's taking maybe a more Australian conservative view We grow a little bit, make sure the business catches up, grow a little bit, and it's like, I think it's managed growth. I think we're doing the right thing. We've got a great team headed by our CEO Holger Arians, and basically I can't talk more positively about the team. In terms of coming back to your question around acquisitions, right now the answer is no. It's not our core focus. Partly because we just don't have the market cap. I'm not going to go and acquire something with a market cap of 100 mil. It's just not going to happen. And the reason I also say this is organic growth for us is going to be much, much more cost effective than acquisitive growth. Let me just try and unpack that. We have about 100 customers to date, B2B customers. The universe is thousands. And that's growing every day with DeFi, NFTs, the metaverse space. So the number of potential customers, the total addressable market is actually growing day by day. And we've got 100. At the start of, towards the end of last year, we had one salesperson. We've now got 3. We're in the process of hiring another dozen all around the world. I think what we're going to see over the next 12 months is an acceleration in terms of bringing on new partners. We're doing things, once again, without wanting to get too nerdy. We're building an SDK. We're further improving our our API, which is basically just ways that companies out there, whether they're a crypto exchange or a wallet or a neobank or a traditional bank that wants to connect with us, just making it really, really simple where, with a few lines of code, they can be connected to the Banxa platform. Once again, similar to the PayPal model. Where you don't need actually even to be a technical genius to be able to integrate PayPal. Banxa has done the same thing. We can integrate the Banxa widget into your website and allow your customers to start trading. So that's kind of some of the technical innovation that we're worked on and continue to work on to make integration easier, which will, in my view, over the next 12 to 18 months, accelerate the number of customers that we're able to bring on board.
Okay. So you don't see any slowdown in growth?
I think, once again, if I take back a step, over the next 3 to 5 years, do I see a slowdown in growth? Undoubtedly not. In terms of, do I see peaks and troughs on a month-to-month, quarter-by-quarter basis? Absolutely. And if you, I know you got the slide up. If you were to just go to the slide, just one up, where you can see the bar graph there. December quarter was our absolute record quarter. The quarter under that, we basically did almost double that, which was down from the prior quarter. This is just the nature of the crypto space. You'll have a couple of quarters up, then you'll have a bad quarter, which is not just us, it's the industry. There's a lack of volume at the exchanges. There's not as much volatility in the space. And then what happens? The next month, bang, it goes crazy again. It's just, I always look at things on when I say, long-term in crypto, what does that mean? 3 to 5 years. Medium term is, 12 to 18 months. So, and short term is, quarter by quarter, month by month. So I kind of take a mid, 12 to 36 month view. There will be growth in the space. And my view is, Banxa will grow faster than the marketplace.
No, all right. So we've talked about the finances. We've talked about the fact that, you've met pretty much all of the qualifications for the Nasdaq uplisting. The only thing that you're looking at now is the $2, right? So I think I told you before, I've always been a fundamental guy. And then I took a course in technicals like 15 years ago, which I used to think was voodoo because I could not understand how looking at a chart was going to help me determine, where it had been is going to help me determine where it's going, right? I couldn't put those two together. Now, the first thing I do when I pull up a company is I look at the chart. And it's really kind of like an X-ray, right? I mean, it's giving me, there's a big story that's being told there, right? And if I look at the chart, it's clearly, so this is a longer term trend line, right? And it's in a long-term downtrend. So, that in itself is negative, right? However, one of the most powerful moves that can happen is when you go from a long-term downtrend to a long-term uptrend, right? So when you break this trend to the upside, it's very powerful, right? So I look at it, I'm looking at this, you took out a 52-week low, you came down and you tested it here at about $1.60. I wouldn't be totally shocked if it were to come down and retest that low. And then it would put in what's called a double bottom, right? The reason that I wouldn't be surprised is because you almost need that to happen to confirm that was it. That was the bottom, right? You need that double bottom test to say, yep, that was it. Now it could pierce that within the trading day, but if it closes back up in this area or above, I don't care where it trades throughout the day. It's where it closes. That's what matters, right? So if it closes at that level, that 159, 160 level, and then it starts ticking back up again, a lot of the technical guys are going to look at that and view that as potentially a very, the double bottom is in. And then the next thing will be the trend line. Once you'll come up to that, and if you take that out with some volume, that now you have a big time trend reversal. And being that you're, and I'm just looking at what's happening fundamentally, right? Your revenues are rocking. You're very close to profitability. You could probably get to profitability if you just made an accounting adjustment, right?
Or didn't capitalize that. Or basically, if we capitalized our development, we'd be profitable. We don't. We just expense everything.
Right. So and then you look at the fact that potentially you've got a Nasdaq uplisting in the very near future. That to me is a whole bunch of potential catalysts to take out that trend line, right? And then you're on a new trend. So, and let's face facts, OTC market is hell. It's OTC hell, right? I mean, it's thinly traded. When you get to the Nasdaq, you're going to have, funds that are going to be looking at the company. And those are the guys that actually move stocks, right? Retail guys right now are the ones that are playing, and they get shaken out just because, they get scared. Right. When you have a stock like this at these levels, what, in my view, this is an opportunity to add, right? If you're a seasoned investor and you understand the company and you have conviction in the management team and the vision, then you look at this like a gift and you add to your position, right? Now, I'm not telling anybody to buy the stock. I'm not a financial advisor. That's not what I do. All I do is present what I see as potential opportunities. And Domenic, you have been helpful to me in many ways with any question that I've had when it comes to crypto. So, I believe in you. I believe that you guys are doing the right thing. You're not going out there and paying up to buy some other company. You guys are growing organically, and you're doing it the right way. You're not, outgrowing your ability. Like you said, you started out with 20 million and you're at 20 million. That is, how much debt does Banxa have?
Zero.
Oh, what is that again? How much?
Zero debt on the balance sheet.
Okay. What's the killer of most companies? Debt, right? I think you're doing everything right. I don't think that the U.S. investor is aware of your story, and that's why we're doing this interview. And I see great things. I just see an industry that continues to grow, and I see a company that is going to continue to grow with it. Right? Tremendous opportunity in my view. If it does pull back to the $1.60 area, I would, if I was not in the stock, I would absolutely be dipping my toe. If I just wanted to take a starter position, I'm an investor. I'm not looking to make a quick buck and, flip this thing. I'm looking for the long term. And these are levels where you've got a lot of uncertainty in the market because of Ukraine, because of COVID, because of all this stuff that has been taking down the small cap, mid cap space, OTC market stocks for the last 10 months. And, I think this is getting to ridiculously stupid levels, right? So good opportunity, in my view, to dip your toe and then follow the story, right? You guys have on your IR page, you guys have investor email alerts that they can sign up for. Anytime you guys have a press release, it will come right out to their email, right?
Yeah.
I can't believe how accessible you are, actually. That may change, but you're a very accessible guy. If people wanted to reach out to you directly, I'm sure you would welcome.
Fantastic.
Right? Okay. Here's what I'd love to do. So I'm gonna wrap this up, unless you feel as though I've missed something.
No, I think you've kind of summarized it well. Obviously, I'm not an expert in charting, but I was very interested to hear your expert thoughts on that. And I think, ultimately you did say, fundamentals are also important as well. I think it's a combination of the charting and the fundamentals. So yeah, we've still got a lot of work ahead of us.
Right. So, and then I just want to emphasize this point real quick. If by chance you were to do a reverse split, some people view reverse splits as negative events. I don't. I happen to love them because, number one, you don't have a bloated share count to begin with, right? But if you wind up doing a reverse split, then, and you do a 2-for-1, you reduce the float, which is, what does that mean? That means that, any significant news announcement, when you only have a limited tiny float, and I consider anything under 100 million shares, I consider that a small float. Anything below 100 million, right? 50 million and less is ideal. And then you get down to 26 million. I mean, that to me is the sweetheart spot, because those stocks can make massive moves on any kind of significant news event. So if nothing has fundamentally changed and the story is only getting better, then that should not bother you that a reverse split is coming. It's because you want to get out of OTC hell into an exchange where there's actually some real funds that can participate in the stock, right? The reason that reverse splits get a negative is because a lot of times they're shit companies that have really bloated share counts that don't make money, that aren't ever going to make money. And they're just reverse splitting because, they're going to go to zero. So that's a whole different scenario. This is not that. So I just wanted to emphasize that. Domenic, what I want to do is, in the next couple of months, if you do have some significant news and maybe you get boosted to the Nasdaq, we do a follow-up. It won't be as long of an interview, but we just do a little follow-up. How do you feel about that?
Anytime. Fantastic, Tim. And really, thanks for having me on the program.
Yeah, you bet. Let me, I'm going to stop recording here, and then, let's see. Let me stop recording. Where the heck did my little record button go? Oh, here we go. All right. Thanks a lot, Domenic, for coming in. Hold on a second. Hey, all you stock market junkies. Thanks for tuning in to another interview here at Alpha Wolf Trading. Today we had CEO of Banxa, Domenic Carosa. Ticker symbol on Banxa is BNXAF. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. Why not give us a share? And hey, while you're at it, how about giving us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.